Today is today is today's Friday. Today's Friday, November 8th, 2024. I just got back from doing some prep work at Westside Drive-In. I am so fortunate that I have a job that allows me to pay for this Regis office. It is currently just a cubicle, but one day I will get a payout and it will be consistent. And then once that occurs, it'll be a large sums of money afterwards. I hope. Yeah. So I heard from gold prospectors. I heard from gold prospectors that uh, in in the areas where there's quartz, there's gold. Okay, that's what I heard. Okay, that's where gold is found. Now, in day trading, profit is found. What I've noticed is that it is found near critical setups. Okay, it's found within critical setups. Some people have a far more understanding of these setups. One of them being is that apparently people can detect whether the day is going to be a trending day or not a trending day. Whether it's going up or whether it's going down, it's trending. And so when they see these indicators flashing before their eyes through their monitor, they can see it early on. Apparently, there's a thing called like advancers versus decliners. And so if there's a certain threshold of advancers uh, making up a greater percentage over the decliners, apparently it has a high probability. It has a high probability that the day is going to be a trending day, which means that at that critical information juncture, there is a prospectus that says that profit is right around the corner when that happens. Now, for me, I've been trading thousands of trades, and I've so the ratio is okay. So the ratio is going to be somewhere around like 48%, which meant that I've lost for the past 2 years in prop firm challenges, and I'm still losing to this day. And that's how it works for me. Okay, other people who are good, they know what they're doing. I don't right now. So I heard that near where quartz are, there are gold in there, but not all quartz have gold. But golds tend to be around quartz. That's what I heard. And so now I'm looking at this situation and day trading. So there's two areas of interest that I have. One of them is it's at a point where there's a reversal that occurs, or something more specifically, it's a breakout. Any trade is a breakout. Anything, anybody who makes in the market is a breakout. Okay, except for options plays where it's looking for volatility to diminish, as where a spread is there. That means that at the end of it, when the volatility declines, then the options premium is taken, right? That's one way of doing it, right? But aside from that, the profit is obtained at a point where there is a breakout. Every trade and every profit is made on a breakout. It has to be it's the top tier understanding of movement is just primarily it is a breakout. It has to have a breakout. If there is no breakout, then it's flatline. Nobody makes money, okay, except for that options thing. So that means some sort of breakout must occur, either upside or downside. There has to be a breakout, and that breakout occurs based on various descriptions about it. Like, so apparently there's if played right and seen right, there is a double bottom, double top. There's also a morning star. or doji, long wick doji. These are things that are flagging the day trader to say that the profit is about to occur due to a breakout that will occur either to upside or downside. So there's two ways that the first part is the breakout. So what I've noticed about so I've been trading the UJ and EU for quite a while. Uh, Not much success, but I've been trading it. So now I'm like recollecting what I need to do in order to profit from this. And so how do I get there? So I get there by understanding the true breakout versus something that is essentially so when a forex pair declines and then shows a small green candle and then moves up a little bit, it has a tendency to retrace back and do a flat line. There's also a possibility that it's going to continue going down. And when a and I've been a victim to that because what I would think is that it would go down, and generally what it will do is it has a wide downtrend, which means that it'll go down, pull back, down, pull back, down, pull back, painting a lower low and lower high all the way down. And me thinking that, okay, so at this point, it's going to be a reversal. And my thinking will generally lead to a severe loss all the way down to the point where truly there is essentially a reversal that occurs where the breakout is meaningful. All the others are just a pullback so that it continues on its way down to the point where all the selling has been exhausted. When that specific at the end of that critical period where at the end of it that I can make a trade uh, to a great impact because it tends to move back up with this breakout that occurs. And when I catch that, I can put some size in it and then take advantage of it. Also, if the pullback is significantly large, then I can actually take profit on there if the downtrend is wide enough. Okay, wide downtrend. Okay, so essentially it's a wide essentially what it is a wide uh, range bound situation, but it's actually tilted a little bit, so it's angled going moving downwards, right? So that's how it works. So that also works well with range bound, where the breakout occurs from the support to the resistance area, and when it reaches the resistance area, then there's essentially going to be a breakout to the downside, and it'll toggle up and down until at a point where the price breaks away from the range bound situation, right? So that's one way that's one way that I make my money. Okay, and I need to perfect it so that currently my win to loss ratio is causing me to uh, be less convinced of my thesis when I go and when I make that conclusion about the particular trade. And so I need to perfect that. So what I'm attempting to do is when I look at this, even if there's a pullback here and moves back up, then I can look at this situation here to say, okay, when a certain and particular sequence of events occurs at that moment, okay, at that moment when it occurs, then I can take advantage of it and ride it up to a certain point where even if it's in a wide channel downtrend, I can actually ride up that big movement from that point to that point with significant amount of risk. When that significant amount of risk is placed, then I can still make money even though it's going down. The beautiful part is when I catch that wave where it is essentially at a point where it is saying that the downtrend has been fully vetted out, and I ride it up with big size on a very long trend. Okay, that's the ideal situation for me. When I for that particular reversal trading, that is essentially the ideal situation selling has completely subsided, and then there's an upward momentum to move in a direction where new installed energy that causes it to move in an upward trajectory for a very long time. And when that happens with max size, I can, I mean, it could be a very, very good day kind of a situation. Now that's the first part. Now the second part is essentially a continuation because in certain situations I'd be I would be essentially um, I would get into a situation where it has already formed and it is attempting to move in that direction. And so when I'm looking at the reversal situation, then the flip side is that it is continuing on the path of the same trend. It is moving back to the same trend. And so in a parabolic situation, it is always moving in that direction. But if it's a narrow or wide channel that is moving up or moving down, then I have to trade that accordingly to essentially be aware of where the support and resistance areas are. Okay, for that particular that catalyst that occur that the catalyst that is causing the price to move. So these are two things that I need to look at. And so gold is found in quartz, but not all quartz have gold in them. And so in day trading, also, profit is found where there is that inflection point occurs, which is called a reversal. And and also the second part is when I look into continuation, I see this green candle, I can get in, but sometimes it's exhausted and it'll flip right back and just not just take out that stop loss and it's over with. And so gold is found in quartz, but not all quartz have gold in them. And in day trading, reversals, areas of reversals do not always have profit because it'll attempt to move up and it'll just go right back down because it essentially is taking a breather from continuing on that trend. And so if I'm mistakenly thinking that there is going to be a reversal and it's going to reverse in a long way, that could be a severe loss to the stop loss. The second part of that is that when I'm trading the continuation, it is possible that even between the support and resistance area, it is possible to take a pullback. And when that pullback occurs, when I enter, that could be a high ticking it and losing it and just getting hammered to right down past, depending on how fast that is, past the stop loss, and it could be a very severe loss.